Hey everyone, welcome to my Ripster EMA Clouds indicator tutorial. Before we begin the presentation, I just want to let you know that this presentation is not financial advice and I'm not a financial advisor. So any trades you take with this indicator are your trades and your trades alone. Okay, so let's jump into our goals with this video. We're going to talk about Ripster's EMA Clouds. I have learned a ton about this from Ripster himself on Twitter, and I urge you guys to follow him on there. It's Ripster47. He talks about examples pretty much daily throughout the day. He'll also give trade ideas and uses his EMA Clouds to kind of walk you through his thinking about why he's taking the trade. So you can learn a ton from him. I highly recommend you following him and going through his examples when you check out his Twitter page. So we'll talk about where you can get the Ripster Clouds. They're free, and they're available on a number of different platforms. So I'll show you where you can grab those. We'll go through an overview of the different concepts around these clouds. We'll talk about Ripster's golden rule of trend, and then I'll walk you through some examples and we can talk about how you might be able to use these in your system. All right, so where to get them? So they're available on a number of different platforms. Ripster built a version on TradingView and TrendSpider, which you can find by searching for Ripster EMA Clouds on TradingView or EMA Clouds on TrendSpider. And then there are versions available for Thinkorswim. You can even grab the version from Ripster's bio links. I also built one. I wanted one that was more like the one that he built on TradingView for Thinkorswim, which is my platform of choice. So I built one and it's free on my website, atrlevels.com at the very bottom. And you're welcome to grab that if you use Thinkorswim. And then other platforms, you can check Ripster47's bio links on Twitter. He has a Google Doc in there that gives you some instructions on Webull and gives you links to the various different platforms you can get it on. And that's the direct source, so I definitely recommend that you, again, check out his Twitter. Okay, so let's talk about moving averages. So a moving average is effectively an average of previous values that provides you a smoothed out version of the price action. And the reason why you do this is so you can kind of understand a general trend as price action changes and it starts to proceed in a direction or maintain a direction. Taking an average of that can give you a sense of kind of which way it's headed overall based on a period. And so that can be shorter or longer depending on what kind of level of trend you're looking at. And there's different types of moving averages that you can use. The most common are the simple moving averages, which can be called SMA or MA. And if it's like the daily moving average, you might hear the word or the term DMA. And then exponential moving averages. And there's a variety of different numbers people choose for this. That's really based on your own liking and what averages, what periods you like. Common simple moving averages are like 5, 10, 20, 50, 100, 200. And common exponential moving averages, you can also use those same numbers. And then some people like to use Fibonacci, so 5, 8, 13, 21, 34, 55, 89, etc. And then a variety of different ones you can do in between. So there's no rules around which numbers you can use. You can use whatever you like, whatever works for your system. And we'll walk through some of the ones that Ripster uses and the ones that I use as well. So simple moving averages don't weight price action. All values in that period are treated equally, meaning there's no favorability. We don't favor any of the price action that's closer or further away. We're just saying, hey, we just want the overall trend based on equal representation of each of these previous values. Whereas exponential moving averages weight recent price action more. And so values that are more recent to the current price are given a little bit more weight, which is effectively favoring the closer price action. And so exponential moving averages are helpful in the sense that they can give you a better sense of more near-term trend changes, whereas there's a downside as well, in that they may provide fake outs as well, whereas simple moving averages will tend to fake you out less, but then the trend change may be delayed, so you may find out about it later. So there's benefits and drawbacks of using each, and you can experiment and play with each of them. They're used widely by many different people. Very common to see simple moving averages. 50 and 200 is very, very common. 921, 821 are common exponential moving averages, and a whole variety of different numbers in between. So the purpose of moving averages is to help you identify near to long-term trends. And trends help you identify potential spots where you can go long or short. Ideally, we want to, as close to a trend change where we have conviction in that trend, we want to take a position long or short. And so using EMAs or using moving averages, you can kind of start to identify some of those trend changes. And then stacked and fanned, so if you use multiple moving averages, when they're stacked on top of each other or below each other, and then they're spread out, meaning they're fanned out, the more of that you see, it typically indicates a stronger trend in that direction. And when it gets to a certain point where it's so fanned out and price action is so far away from stacked moving averages, typically you're going to get a pullback to those moving averages. So that's something that you can watch for. And then the crossing of moving averages will indicate a weaker trend, a trend change, or chop. And so it's helpful to monitor the interaction of moving averages to see what might be happening. So with that said, trend can provide conviction in directional trades. So if you have stacked EMAs and you're sort of riding those EMAs up or down, that can really, really give you a lot of conviction and help you stay in the trade. Okay, so let's talk about EMA Clouds. So an EMA Cloud is a really simple and elegant solution that provides a lot of information very, very quickly. And so it's made up of two EMAs, typically one faster and one slower. The faster EMAs are just a smaller period, like let's say 5, looking back just 5 candles. And a slower EMA is just a longer period, and that's, let's say, looking back 12 candles. And so from that, if you shade the area in between these two EMAs, you get what looks like an EMA, what looks like a cloud, which is what the EMA cloud is. And so the nice thing about this cloud is you can do some interesting things based on where the faster and slower EMAs are relative to each other. And so on some of the clouds, you'll see when the slower EMA is below the faster EMA, the cloud will show, let's say, a bullish color. And when the faster EMA is below the slower EMA, the cloud will show a bearish color. And so it's a really quick visual way to kind of understand what's going on the chart without having to dive too deep into the price action. And so these clouds can then act as support and resistance levels, and you can utilize them in that way and identify what's happening to the trend based on how they interact with that support and resistance. So common EMA clouds, these are the ones that you'll typically find in Ripster's versions of the indicator, and I also have them in the one that I built for Thinkorswim. So you have the option of changing these however you want. I use the default ones that he uses. So there's a 512. You can add an 8-9, which is typically used for pullbacks. There's a 3450, which is typically used for trend, and we'll talk a little bit about his golden rule and that EMA cloud. The 2021, so the 21 EMA for a lot of folks is used as a pivot. And so the 2021 can offer that same capability in cloud form. The 7289, which is maybe a longer term trend, I don't use that one, but it can be useful in certain cases. And the 18200, which I typically use on higher time frames, and that's just the long-term trend. Okay, so these are the clouds I use. By default, I use the 512. That's my fluid trend cloud. So that's what I'm monitoring when I'm in let's say, a trade, and I want to see, hey, are we riding up or riding down on the 512? I'm monitoring that fluid trend cloud. The 8-9 is typically where I want to do my pullback adds. So if I'm adding to the position, I'm feeling confident about where it's headed, that's typically where I'll look for pullbacks to add to the position. The 2021 is sort of the mean, the pivot. The 21 EMA is really important in the sense that typically as price action moves further away from the 21, it will tend to revert to the mean. And so it likes to come back to that 21. And so that acts as kind of a nice fluid pivot for price action. And I like to have that cloud on there. The 3450 is the trend cloud. So this is what we're monitoring to make sure that we're still sort of bullish or bearish on the day or on the week, whatever time frame you're looking at. And we can talk about Ripster's golden rule of trend, which uses the 3450. We're going to talk about that in a second. The 180-200 is a long-term trend cloud. I typically use this just on the daily or higher time frames. And so that's a super useful cloud to understand sort of the long-term trend of a stock, particularly if you're position trading, you're buying and selling shares for long-term holds. All right, so here's an example of Apple. It's an Apple daily chart, and I'm kind of giving you a little bit of all the different types of price action. We're going to go into the interaction of the clouds and different types of price action in a second, but I just wanted to show you the clouds that I use and kind of what they look like. So you've got this green cloud that goes green, red, and then it turns back green. That's that 512 fluid cloud. And when it's green, that means the 5 is above the 12, and so it's bullish. And when it's red, it means the 12 is above the 5, and so now it's bearish. So it gives you kind of a beautiful immediate look at kind of what's going on with the fluid price action. And since those are faster EMAs, they'll typically switch from one color to the other faster along with the price action, kind of giving you a near-term trend change understanding. Next up, we've got the pullback. So you can see this little green and it turns red, of course, when it's also bearish, but it's sort of this light green and light red. Kind of looks white almost, but I assure you it's not. It's a lighter shade of the internal color to kind of give it that same appearance, I guess. That's the way I did it. But that's the pullback, so you can potentially add on a pullback and then take profit when you see fit. All right, and then next up we have our pivot. So this 21 sort of flowing through. You can see the price action is going up and down over and below that. That 21 is our mean or our pivot, and so I like to have that in there on all the charts to understand kind of where we are relative to that. 21 EMA is one of my most important, and so I like to have that on all charts. And then finally, we've got this 3450 and this 180-200. The 3450, when it's the 34 is above the 50, it's blue in this version of the indicator, and orange when the 50 is above the 34, indicating bearish and bullish and bearish EMA trend. And then I've got this 180-200 long-term trend. I just keep that the same color. It's just gray to give me a visual indication. I keep it light because interactions with that are rare. Hopefully, depends on the stock, but typically in uptrending or downtrending stocks, the interactions will be less common. And so having it sort of faded into the background is fine for me, and I don't really need to know whether it's stacked up or stacked down for those. So I just keep it gray. So those are the EMA clouds I use. And again, they're the defaults on the version of the indicator for Thinkorswim that I have. And you can configure them that way as well on any of the other versions. They're all configurable, and you can adjust colors and everything. All right, let's talk about time frames. So I use all the same standard time frames that Ripster uses. I've tried to copy him as much as possible, so I have as few variables between kind of how he set up his system and how I use my system. So these should be pretty almost exactly like what he's doing, but there may be variations, or he may have changed things since I adopted this. But with extended hours, there's typically the 3-minute and the 10-minute. The 10-minute is really the one that I live on most of the day. The 10-minute, and I would say the hour, but that 10-minute is really the intraday trend. So if you're day trading, that's kind of the one that you want to be on. And then, of course, you can go down to the 3-minute for entry exits, and then, of course, scalping. You can even use the 1-minute. You can use the 5-minute. You can use whatever time frames you like, but these are the ones that Ripster typically uses. And the 10-minute is really common. You'll see a lot of charts that he uses. The 10-minute is great in a lot of ways because there's a lot of fakeouts. And so for trend confirmation, having a 10-minute, you may lose a little bit of the juice on a move, but that's okay. At least you're not getting faked out. And so I find the 10-minute really, really nice for being fast enough to take day trades, but slow enough that it kind of smooths out the fakeouts that you might get on a 5-minute or below. But those are the two that I use, and those both have extended hours on. And then without extended hours, there's the 1 hour, the daily, the weekly, and the monthly, and those all provide trend on higher time frames. But I really typically during the day am, switching between the 10-minute, the 1 hour, and the daily. The daily, of course, is the most important chart, and that's what I spend a lot of time on in the evenings when I'm finding plays. The daily, weekly, and often the monthly. I'm starting there and then zooming in. And that's generally how I operate. I like to start zoomed out and then zoom in. So 10-minute, 1 hour, daily, that's kind of where I live during the day. Daily, weekly, monthly is where I live more at night with a zoom in when I need to. And that 3 minutes there when I need to enter, exit, and scalp. So those are the time frames that I use. And I won't go through details about each of the time frames. The clouds apply the same way, regardless of time frame. The general philosophy is the same, so everything that I talk about on any time frame really is applicable to the other time frames. All right, so the golden rule of trend. So this is Ripster's golden rule. It's been super helpful for me in understanding how to use these clouds. This is sort of the central theme that I kind of I think about when I'm using the clouds, and it's real simple. The stock is bullish if it's over the 3450 EMA, and it's bearish under the 3450 EMA. And that 10-minute and 1 hour are really helpful. So intraday trades, you're using that 10-minute, and you can monitor the golden rule using the 10-minute and for intraday trades. And then the same thing with the 1 hour for 1 hour in the daily for swing trades. Same concept. You can kind of monitor the 3450 and the 512s for those time frames. But yeah, the golden rule of trend is bullish over 3450 EMA, bearish under 3450 EMA. And you'll see examples of that in a minute. So here's a bullish example. And again, I want, you'll probably want to go through these examples a few times, but you'll get a sense of there's sort of a color appearance to the chart when it looks bullish versus when it looks bearish. It just sort of changes color, and I really like that. It gives me a very quick way to glance at something and see if it's bullish, bearish, choppy. So maybe go through these examples a couple times so you can kind of see that visual nature of it. But here you can see it's green for the 512. Green for the 8-9, the 2021 is headed up and to the right, and the 3450 is up and to the right. And so we're above the 3450. This is in a bullish trend. You can see early here we crossed through the 3450 before it was orange, so we were sort of in a downtrend, bearish trend, and it flipped. The price action went above it, continues to ride the 512. Eventually, the 3450 flips. And we have this beautiful green-blue color that sort of fills the entire screen. This is the 10-minute that I'm looking at. And so in contrast to that, let's look at the bearish example. Now, a similar situation. We were in an uptrend, sort of bullish before. Price action goes above the 3450. So here's where, you could potentially get faked out. On lower time frames, you may think, oh, this is headed higher. But on this, you can definitely see that it changes. It goes below the 3450, then it rides the 512 all the way down, and of course it gives this beautiful reddish orange color. Again, 512, 8-9 stacked down, 2021 headed down and to the right, and the 3450 down and to the right, also orange. So it's been flipped over. You can see that where it flips over from being blue to orange. And so this is a very decidedly bearish example. These are both the same stock, Walmart. So one day was bullish, one day was bearish. Here's an example of chop. These are the Qs. So you can see we were in a nice uptrend, fanned out EMAs, stacked. Then they start to crisscross. Price action drops below. So, you can take a scalp here, no problem. That's fine. Especially if you zoom in on a lower time frame, it'd be fine. Then it comes back up, chops through. The EMA's flipped, 3450's flipped here. Now it comes back through, goes above. The 512 flips. That fluid time frame is great for scalping, or you can jump into a lower time frame and kind of use that instead. But you can see it's quickly flipping through from red to green on the 512. It does that a bunch of different times, and that's chop. And the 3450 flips over, then it flips back over. This is just a good example of chop. You're seeing all the different colors from all the clouds. It's a hard trade to hold on to. It's really, fine for scalping. Probably not something you want to trade intraday. And of course, if you're swinging, you're looking for entries dependent on slightly larger time frames. So you could potentially find some entries for that here. But you can kind of see the visual nature. And, I'm going to go back. Let's go back real quick to, beautiful up and to the right. Colors are the same. Stacked EMAs fanned. Beautiful down and to the right. Colors are sort of static. They're not changing. Stacked the other way and down and to the right. And, all the colors of the rainbow here and just jumping up and down. So, it's just a great example of chop. So that's, it's super nice that these clouds can kind of give you that visual indicator real quick of what's going on with the price action. So that's something that you can watch for. And here's an example of trend change. This is Apple. And, you can see this is the 10-minute chart again, just 2 days of price action. It's fairly decidedly bearish in pre-market action right here. 512 comes back up, it retests the 3450, gets rejected here, false breakout of that 3450, and then sort of just continues down the rest of the day. Another test up here, but it's, this is a bearish chart. It's heading down. Then somewhere during pre-market the next day, it goes above the price action, everything flips, and it essentially stays up and to the right for the most of the day. There's, lots of great trades in here with pullbacks to that 8-9 where you could add. Then it comes back and tests the 3450, but then continues up. And so you can kind of see where the trend flips right around here as the price action starts to go above the 3450, indicating that the trend has changed. So this is a good example of Ripster's golden rule in action. We're moving from bearish price action to bullish price action. And you can see that 3450 flips from orange to blue. So it's a nice visual representation of what's going on when you see trend change. And this is a longer time frame. So this is Apple during the COVID crash. You can see that this is the daily chart. Price action was going up. We have some retests of the 3450, but it sort of goes up. But here you go. This has got to be early March, when things started crashing. It goes right below the 3450, comes back, tries to retest it, then goes, further south. So this was an opportunity. If you were holding, let's say, commons and you were unsure of what was going to happen, there were opportunities to exit here and then potentially buy at a lower price if you needed to, or at least be able to monitor kind of where you are relative to trend and your position. We did a retest of the 3450 and then it absolutely sort of just crashed, rode the 512s down, everything became flipped over. You had the 512s flipping first, then you had the 2021 or the 8-9 2021, and then finally the 3450 flipped over was bearish for a little while, and then of course we recovered just a couple months later to a degree, and then the price action became bullish again. So you can kind of see the trend change example. It works whether you're on the 10-minute, 5-minute, 1-minute, daily, yearly chart. If you want to look at that, it still works for all the charts. So that's it. That's Ripster's EMA Clouds. They're really simple, really powerful, super useful, and it is a great basis for a trend-based trading system. I use them every day as part of my trading system, and I definitely think you should check them out. And if you have any questions, please feel free to drop them in the comments below.